But do want to get your thoughts in, how can I not, right, on the BOJ and the path forward there, especially at a time when the Fed is talking about scaling back and that rate differential trade, because you're talking about how 2023 was all about re-liquification of the market, the JGB market.
Yeah. And look, I mean, first of all, the Bank of Japan has done a phenomenal job. Basically, it used to dominate the bond market. There was no liquidity in the 10-year bond market. Everything was dominated by the Bank of Japan. Over the last 12 months, this has changed. The private sector now basically accounts for around 95% of the liquidity there. So the normalization process, I think Governor Ueda deserves 10 out of 10 for getting that actually going. Now, and remember, this is very different from the sort of accidents that happened when the UK or when Australia tried to normalize its bond markets. You really had chaos. Here in Japan, you don't have chaos. You've got a very, very good on-ramp for normalization. And I think for 2024, the big theme is going to be increases in short-term interest rates. I personally expect that the Japanese policy rate, which, as you know, currently is basically at zero, will be standing at 0.75 to 1% in a year's time.
Right. What about abandonment of this policy range of YCC?
It's interesting, right? Effectively, as you know, the hard cap has already been removed. It's now just a reference rate of 1%. And I think for all intents and purposes, why would you completely abandon this? Look, as an example, I think that, the risk, if and when there were to be, capital flight from Japan, the Bank of Japan wants to keep the option of actually intervening in the bond market. So I think for all intents and purposes, the YCC, the yield curve control, is already gone. You've got a reference rate, which is very prudent given the amount of fiscal debt that Japan has.
What does this mean for the Japanese yen then, given the rate differential story that I touched upon?
Yeah, and you put your finger, and you've seen over the last 4 days. I mean, it's the Federal Reserve is boss. It's the turn, the pivot in the United States of America, with the Federal Reserve now clearly indicating that maybe as many as a couple of rate cuts are actually in the pipeline, and that pushes the dollar down. So for all intents and purposes, I think the normalization that I expect in Japanese policy rates, over the next 3 or 4 months, is going to help for the yen to strengthen. And, in my personal view, I expect that this time next year, dollar yen will be trading at around 110, 115.